So I'm getting a lot of questions right now. There's a lot going on in insurance and homeowners insurance. And I don't know, is it what happened in Florida? Is it a catastrophe in Hawaii? I mean, how does that affect us in Michigan where we don't have hurricanes? We don't have all these catastrophes that happen naturally. And I continue to hear that homeowners insurance is going up. Can you explain to me a little bit why and what we're seeing, what a typical homeowner would expect?
Yeah. Well, us in the insurance industry, we typically don't like to be the popular guys that are talked about, so we're getting a lot of attention these days. It's kind of flattering, We've never really been a factor in, even in the home buying process, because typically, it's incidental, right? It's not very expensive, a big part of the purchase price. But it's not the case anymore. Homeowner insurance has gone up a lot. In fact, on average, we represent about a dozen companies. Most of them are state-based companies, regional companies. And out of those companies, the average rate increase right now is 23.1% over last year.
Wow, 23% is the average, and that's right here when we're talking in Michigan?
That's average across companies, average across different clientele. It's 23.1% increase year over year. And so the reason for that is last year was the worst year in insurance history that we've ever had from a claims perspective. And so the frequency of claims have gone up as well as the severity of claims have gone up. And so, all of our rates, they're based off of what the government allows us to be able to charge. And so we have to show historical data that says, here's how many claims we have. We should be able to charge this rate to be able to pay for those claims. So
activity in other parts of the country affect local insurance numbers?
No, kind of. There's definitely the macro environment where companies have to be able to make money. However, rates are based, typically state-based, but they're also even like zip code based, and so they're very local to where you're purchasing. So a lot of people think about insurance, they see the Florida incident, right? So massive claims happening in Florida. But here in Michigan, this year alone, we've had a tornado that came through the area. We don't typically see those, in our area. We had 2 massive hailstorms that caused tons of damage. And so the frequency of claims are going, we're having more claims, but also the severity, so it used to be you could put a roof on for $2,500, $5,000. If you had a fender bender, it's like $1,000, $2,000. Not anymore, right? You get in a car accident, you're going to have a couple months until you can get your car to the shop. And then when you do get in the shop, it's twice or 3 times as much as it used to be. So we're hit by frequency, but we're also hit by severity. So it's kind of the perfect storm for a rate increase environment over this past year. Bad news is this year is even worse than last year right now for many of our companies. It's not getting better yet.
So you talk about representing with your company, and I want to share something. I moved all my insurance over to you about 5 years ago, and it's easy to be a great insurance company until you have a loss. Yeah. And we had referred to you for a long time because I respect you and respect the way you do business, but for the loss that we went through having a fire in our house, it was unbelievable. I am so glad I wasn't on .com somewhere, and I really believe in buying the same way. So it's local and business done local with real people. So I just want to commend you and your team. What an awesome job you did in dealing with the house fire in my house was unbelievable, and I just want to say thank you for that.
Well, just like in your business, it's not rocket science, right? You want to treat people with the golden rule, and when you know somebody, when there's a face to it, and when you actually have to be held accountable in person, it's a little bit different than if there's somebody online in a chat, right? And so
someone that may or may not be in the United States or here or local.
It doesn't even matter at that point, right? And so the golden rule works a lot better when you know the person, and so that's how we do business, how you do business, which I think is why it works, because we have the same philosophy with treating our clients, fairly. But I think, as we look at the environment right now, people are still, the price is crazy, right? The price seems like it continues to get more and more out of hand. And so they say, is it worth it anymore? Is it worth it? Right? And so you see a $1,200 premium, maybe opposed to a $1,400. But, you've had claims. We've had many clients who have claims. These claims are tens of thousands of dollars, right? And so when it comes claim time, it's like, was the $200 worth it? And so for us, we're selling ourselves just like you're selling ourselves, and not just words, but we back it right with the work.
What I found with you working and representing a number of different companies, how many different companies are your go-to companies that you represent day in and day out at your insurance?
We have direct contracts with about a dozen different companies, but we primarily work with 5 who are kind of regional companies that are based mostly out of Michigan.
So it seems to me that I might see some of these big ultra giant companies and they may have these big moves in premiums. If you look at any one of your carriers having big move in premium, you can look at other options for those clients, correct?
Yeah, we can absolutely adjust, and we do on an annual basis.
Good. You provided us with something, you've done it for the last several years, to kind of give us an estimate for what someone should expect to see in homeowners insurance. And I know we've got a little chart. Why don't you walk through a couple of those variables? And by no means is it a hard quote. It just gives us some numbers. When I talk to clients, I can give them a general number. What drives those numbers for insurance premiums for individual families or individual clients?
So obviously every person's unique. However, there's kind of categorical rating factors. And so a couple of the big ones are how big is the house, right? So what is the replacement cost of the house? And so coverage A, which is the replacement cost of the house, is the biggest driver of premium. And so right now we're in an environment where the cost to rebuild is just about the same price as the purchase price. And so, when you're looking at the estimate, you could say, hey, if they bought it for $350,000, typically it's going to be a $350,000 replacement. That's the number one factor. The second thing that really drives it is that person's financial stability. And so there's an insurance score that everybody has. It's based off of many factors, similar to a credit score, but it just shows, does this person pay on time? Does this person make sure that all their bills are up to date? And so those are the two biggest things that really drive an insurance rate.
So I understand a little bit in getting some general numbers and what it's going to look like, replacement costs being a big factor and financial stability of the individual client being a big factor. What kind of strategy are there with deductibles and the size of deductible that someone chooses and how that relates to a premium? Are you seeing different deductibles with different premiums, and how do you help your client navigate what the best decision is for that?
Sure. I think the first thing is the philosophy of a deductible. So a deductible really is a self-insurance. So this is the amount of money that I'm saying, you know what, I'm going to be responsible if something bad happens. I'm going to be responsible for this amount. So I'm self-insuring basically to my deductible limit, $1,000, $1,500. We're seeing massive jumps right now, discounts in premium. So if somebody has a $500 deductible and they go to a $2,500 deductible, it can make a big difference. But the caution there is that is your self-insurance. That means that you have to have $2,500 that's sitting in an account. So if something happens right in a moment's notice, you can spend that $2,500. And so yes, we're happy to move that deductible up. And in many cases, we think it's wise. I would rather not pay as much in an insurance premium if I can self-insure a little bit. However, you have to have that money sitting aside.
So what would you see as the low deductible for a homeowner's insurance policy, and what would you see as a high deductible for a homeowner's insurance policy?
$1,000, I would say, is the lowest deductible that we're seeing really at all anymore. $500 is not even realistic anymore. And then on the high side, we have clients who have $10,000 and even $100,000 deductibles. And so those are clients who have multi-million-dollar homes. We see the biggest price breaks between that $1,000, $5,000, and $10,000 deductible.
So those clients are probably less likely to have a smaller claim because it's going to have to blow past that deductible, and even slightly past that deductible, they probably wouldn't want to have a claim.
They can self-insure $100,000. That sort of client doesn't want to have to submit a claim for $110,000. Like, hey, I'll just take that on my own. That's self-insurance. But for most people to have $100,000 that they're willing to give up at a moment's notice, they're not willing to do that. I mean, one of the things that we have in common, I think, is especially in the .com age, we started to see a lot of these companies, move into mortgage space, move into the insurance space. We were probably the same. It's like, shoot, these companies are going to take over, right? It's like, crap, my job's going to be over. But pretty quickly we realized, you know what? There's actually value in what we do. People actually still choose us, right? And they still go to someone who's local. Why do you think people shop still with people who are local like us?
Well, I'll tell you, those commercials aren't free.
Yeah.
And you look at the giant ad expenses to generate just warm bodies. And that's the same in the mortgage business. Like, wow, call .com mortgage, whatever, it's going to be great. It just doesn't work. I mean, the concept's great and worked for some people, but at the end of the day, people buy from people. And I look at when I've had a claim and how well it was handled. When you look at all the people you take care of, instead of dealing with someone who may not even be in the United States, dealing with an insurance claim in your business, same as us in our business, looking at someone who is 8 states away, working with someone's biggest purchase of their life. It's not something you want to do online. It's something that's live, local, and personal.
Yeah. And I think too, it's one of those things that, we see the new company that comes out and we immediately like, shoot, should we pivot? Should we change something? It's like, no, we're in the people business. We do a good job. We're like, okay, AI is coming out now. What do we have to do with AI? Because if we don't, they're going to take over the world. It's like, we've been here before, right? For us, it was autonomous vehicles. We're like, they're going to take over. We're not going to need auto insurance anymore. We're still here because people need people, right? They need to actually see a face when they're doing business with somebody.
When you have a mortgage, you have to have insurance. So it's not a question you have to do it. There's someone has a lien on your home. They have to make sure that they're covered. So that's the minimum. What if someone has their house paid off? They no longer have a loan. I've seen some talking heads recently saying, do you even need really to have insurance? Why don't you walk me through that if your house was free and clear?
Well, I don't think anybody likes the feeling of having to have something. So the good news is that whether you have a mortgage or you don't have a mortgage, it's still a smart idea to purchase insurance. When you think about insurance, you're building a life, right? Each person, when they purchase a house or they're building a house, that's obviously, sometimes literal, sometimes figurative for the life that they're trying to build. And that's all sitting on top of a foundation. The reality is that bad things can happen. There's always a proverbial sinkhole underneath that house that at any time that floor could break, right? And so the higher you build, the more you build, the more the thicker of a foundation that you need. And so if you want to have all the cash in the world to be able to lay that foundation, you can. But for most people, they need a pretty thick foundation, especially people who've paid off their house, especially people who have wealth. Because if they get sued, I've had lawsuits over $5 million, right? And so for our clients to want to have to part with $5 million to have to go to court and settle on a liability lawsuit, they need a foundation that candidly cash just cannot provide. And that's where insurance comes in. Insurance, the definition of insurance is taking a small financial loss so later in the future, you don't have to take a potential larger financial loss. And so we're seeing claims get bigger and bigger and bigger every year. If somebody's going to get sued, they're always going to get sued for $1 million. And we see it happen time and time again. And so it's not just the coverage on the physical house, it's also the coverage if you're sued, and people are super sue crazy, especially in hard economic times. And so insurance provides that financial foundation that simply cash just cannot do.
I imagine someone who has their house free and clear, that's in a good financial situation, could take on a larger deductible, maybe one of those bigger deductibles we were talking about earlier. Beyond just homeowners insurance, I've heard about umbrella coverage. Tell me about what umbrella coverage would be for someone that maybe is in a higher net worth, has paid down their debt, have other assets. Walk me what an umbrella coverage is. So
umbrella coverage simply makes a thicker foundation. And so, on your homeowner's policy, we're writing people with $1 million of liability coverage. An umbrella policy simply just adds more liability coverage to that homeowner's policy as well as to that person's auto policy. Typically, we see anywhere from $1 to $5 million of additional coverage. And so if you are building a house that's $5 million on top of that foundation, you need a foundation that's at least $5 million thick, right? At least in an insurance policy. And that's where an umbrella comes in.
How often, what percentage of your clients do you think have umbrella policies over your overall percentage of your clients above and beyond just the homeowners?
So when we're working with new clients right now, about 30% of our clients are purchasing liability umbrellas for at least $1 million. And the reason is because so many people are suing, right? And so these people are buying homes, they have assets, maybe they have some savings or retirement, and they want to make sure that's protected. And so if they get sued, they don't want that to be drained. And so we write a liability umbrella to provide that protection if they're in the event of a lawsuit.
So I have a lot of police officer friends, and I try not to be the guy that talks about, hey, what happened at work and whatever else. But, when you become good friends with someone as you and I are, what's the worst claim that you've ever had?
We wrote insurance for a client. It was actually one of your company's clients. And they bought this house kind of as a seasonal home, and they wanted to live in Florida in the winter. They bought this house in like September, October, and then they left for Florida in December. So they only lived in this house for a couple months. They come home in the springtime. They walk in the front door, and there's about 1.5 feet of water in the main level. This house has a basement. There was water from the basement all the way. It was about 10 feet of water. They had a leaky pipe, and their house, man, credit to their house, was sealed shut. It wasn't letting any water out. And this place was completely ruined. It was a total loss. We ended up actually buying this couple a very nice Class A RV because they said, "Hey, we're gonna have to rent a house for the next year as we rebuild. Could we do something else?" We said, "Sure." We bought them a Class A RV to live in. So they were happy as a peach.
So instead of paying rent or paying their expenses,
we bought them a Class A RV. Yeah.
Okay.
And so they got an RV out of the deal. They were pretty bummed because they just bought this house for only a couple months, but now they have a brand new house on a nice lake and an RV out of the deal. So
that's funny.
Yeah.
So we have the privilege of working with a lot of first-time home buyers. A short 30 years ago, I've been in the business for 22 years. A short 30 years ago when I bought my first house, I did not have a great experience as a first-time home buyer. I am passionate about helping people become first-time home buyers and giving them great advice. One of the things that happens often, I won't name any companies, like, well, I have my auto insurance with XYZ internet company. And I encourage them to talk to someone who is a local professional that offers a variety of different companies and really bring it in-house and develop a relationship. Walk me through why you think that's so important instead of just going through maybe who your auto insurance was through that you found someone cheap online, and why it's so important to have a local professional representing you for your insurance.
Yeah. Well, I think that it's twofold. One, there's the personal aspect where we've already said people like working with people. And so just the fact that you get to talk to a human being, even text with a human being, like there's joy in personal communication.
Well, it has to cost a lot more money.
And people think that. And so oftentimes, and most of the time, it doesn't. And the reason it doesn't is because we're a brokerage, right? So we're not, if all you have is a hammer, everything's a nail, right? And so for us, we're a brokerage. We represent a lot of different companies. Now, those companies also for us are local companies. And the reason they're local companies is because I know where their headquarters are. And if I have a claim that goes bad, when you have a claim, if it went bad, I can drive to that headquarters and I can deal with those people mano a mano and say, we got to fix this right now.
And there are some big insurance carriers right here in the Midwest.
There's a ton. In fact, most insurance carriers are right here in the Midwest.